and understand what's happening with the capital goods sector as well. Ashish Bhandari, the MD and CEO at Thermax Group, joins in on the show for exactly that. Ashish, hi, morning. Great to have you on ET Now. I just wanted to understand, because after your previous quarter numbers, what one has seen was that there was a cautious near-term outlook, there were execution delays, which were key challenges right now. However, you are expecting a revival in the second half, right? Tell me, what's the journey like? How soon do you think the revival is going to kick in? And are the green shoots already visible?
Good morning, and thank you very much for having me on the show. I would like to rephrase the words that you used. I'd never said that we had slowed down in any sense. Yeah, Q1 revenues were relatively lower, especially given our backlog, and that was due to execution-related delays at project sites. Some of it under our control, a lot of it driven by weather and early onset of monsoons. I don't see any structural issues as yet. Yeah, we'll talk about the fallout of the tariffs and then some of the other positive news as well. But so far, we don't see any structural issues. Weather-related challenges have been more severe this year. Yeah, monsoons all across the country has been strong, which has been creating some amount of challenges, which will show up in Q2 as well. But overall, no particular concerns of customers not delaying projects or not wanting to pay. We don't see any those concerns. So whatever is the backlog will clear itself out through this year, and that should result in a jump in revenue and margins and profitability as well.
Good to hear that, Ashish, and I stand corrected on that too. But wanted to understand whether, according to you, tariffs are the only challenge right now.
Good question. I think tariffs is one of the challenges, and perhaps at least in the discussions, it has taken a bit more of a precedence, not only for companies like Thermax, driven by direct exposure to the US, which is minimal and insignificant. And our chemicals business has been spared from the tariffs. So the net impact to us is less than 1%. Yeah, the impact that we are less sure of currently is what happens to industries like textiles, who are our direct customers in India, and how will that play out? Because those were some of the sectors that were investing in India as well. That will, I think, take a little bit longer to understand how that sector reacts. But overall, demand across India has been reasonably good. Our channel business, which is a good barometer on how overall India demand looks like, has been doing very well across sectors. At a macro level, power in particular is a big sector which is emerging, which wasn't expected previously. So there are some large opportunities showing up on the power side. The ethanol sector has been relatively softer. Yeah, we are all understanding how that path from E20 to E27 goes. But if I take these one or two outliers here, and one on the positive side, one on the negative side, the rest of the businesses are doing reasonably well, growing year on year. It's not like 22, 23, where we were growing 20-30%, but they are all showing good growth.
All right, good to hear that. Hi, Ashish. Morning, this is Shrishti. But Ashish, help us understand, where are you finding opportunities in terms of the government and the private Capex? Because we just had that GDP number, which was very good. But the other fact that economists are highlighting is that maybe in the second half, the capital expenditure from the government side can be a little lower. How, as an industry player, you are analyzing that, and within government and private Capex build up, where are you building hopes on?
So Thermax is not that driven by government Capex. We haven't done government power projects. We don't do municipal or large utility size renewable energy or water projects. Yeah, our business is driven. And certainly, we have very little exposure to road and general infra. We have some exposure on the chemical side, but that's minimal. We are driven more by private capex. Yeah, we're driven by steel, cement, refining and petrochemical, also by pharmaceutical, food and beverage, chemicals. So a plethora of industries and largely diversified across India's private capex. Yeah, and that's how we look at it. And that private capex was, especially after the elections last year, for a couple of quarters, was softer than what we expected. We see signs of pickup, and we continue to be reasonably optimistic that this year would be better than last year, at least in terms of multi-industry growth. And then on the larger projects, we had only one large project all of last year, which was international in exports. We expect more projects this year. And even on exports, we expect a better story this year than last year. Yeah, which also was a good story. We expect exports to be even better this year.
Okay, sounding optimistic there. Ashish, hi, this is Snehi joining in. Let's talk about your recent acquisition of that 23% stake in Thermax Bioenergy. Help us understand how will this acquisition enhance your capabilities and market position in the biomass and bioenergy sector, and also what's the outlook that you're hoping for that the contribution from here will be to your overall top line?
Sure. The bioenergy and especially the bio-CNG sector has been part of Thermax's story for the past 2 years. A reasonable amount of it was negative because this is the business where we have taken quite a few losses, especially as we look to establish the technology and build out our capabilities. Our JV partner, EverEnviro, and us, we had different expectations on the future of this business. Having invested and having built our capabilities, we want to continue to invest and to work towards a future which we think is potentially bright. Yeah, I'll underline the word potentially. Whereas our partner, after having the losses, did not see an ability to continue to invest. They were private equity players. So we gave them a reasonable exit, and we are 100% owners of the JV going forward, with an ability to work closely with all of our companies, with an ability and an interest to continue to invest and build out our capabilities. How this sector evolves will depend, in my view, not only on technology enhancements and capabilities on the ground, but on government policy as well. Yeah, and there are multiple policy interventions that are expected. But you can see from some of the recent announcements by many of the major players, there continues to be a great deal of interest in this space. And what has happened in the ethanol space, an opportunity to replicate that in bio-CNG by converting what is agro waste, like parali grass and all, into natural gas, which India needs in large amounts.